The world has advanced. The world we occupy today has surely made significant steps compared to a few decades ago. Talk of communication, traveling, studies, education, entertainment, health, and most importantly, finances. Some will argue that finances are the most important resources needed for a happy life. I will not dispute nor confirm, but what I will say is this: that the world will hold to a stop if the global financial system breaks down and movement of financial resources is made impossible. Technology and information have played a key role in getting us to a place where transactions are almost instantaneous. From Alaska to New Zealand, from Chile to Japan, from South Africa to Greenland. With a mobile phone, you can now send money. With crypto assets, you can now trade. With digital currencies, you can store wealth, and this alone has made the world a true globe. But I am worried. I am concerned with how quickly we are moving, but how slowly these changes are making an impact to the real people. Impact is as a result of synthesis of information, which we have in plenty, but with very little knowledge. Our people are keeping up with the technology but are not keeping up with the knowledge that can be used to empower their lives. Organizations are churning out data, information at every fall of the sun, and none of us can keep up. That is why we have dared to take a step back and review some of the information we thought is relevant and important, especially in the decision-making process in our daily lives. Let us understand our global financial sector. But so that we don't bite more than we can chew, let us start from home. We shall venture into the rest of Africa and the rest of the world, and I am certain our people will be empowered. Ask yourself, how much do you really know about the financial sector? What does the financial sector do in an economy? Who runs the sector? How much of what you say is informed by hearsay? How many times have you wished you had a little more information about finance in a meeting, in an argument, in an interview, but you couldn't retrieve it from your memory because it did not exist in the first place? Now, let us correct that once and for all in this channel. I have a plan for you for this whole year. I am going to break down all the relevant sectors of our economy and feed you like it has never been done before. From now onwards, you will know about all economic sectors, what they do, who the most important people are, how you can make money, the trends both locally and internationally, and the reasons behind the decisions being made in the sectors. I hope you catch up with the world from these services. The financial sector is the glue that holds it all together, the oil that keeps the world economies grinding, the sector that makes it possible for globalization to thrive and for international trade to be possible. This sector is so critical that whenever there is a global economic meltdown, one or more of the causatory factors is usually attributed to this sector. Now, because we don't have all the time in the world, and to avoid all the voluminous history associated with the transformation of the financial sector, let us narrow down to the most important elements of the present time financial system. The global financial system can be defined loosely as the financial institutions, financial entities, laws, regulations, and practices operating on an international scale to facilitate global financial transactions and to sustain world economies. In order for this to happen, buyers and sellers must exchange within markets, supported by financial institutions and regulated by international laws. In other terms, it has three components: buying and selling, lending and borrowing, and risk management. As citizens, we can best understand the financial sector through the services that we receive. These include banking services, retirement benefit services, investment services, insurance services, and savings. These subsectors are under the watch and close supervision of the big brother, the National Treasury and Planning, as in the case of Kenya. In Kenya, we have a dualistic nature of existence, which means it is composed of both formal and informal sectors working together to deliver services to our needs. The formal sector in Kenya consists of banking, pension, insurance, capital markets, savings, and credit cooperatives, microfinance and development finance institutions, financial market infrastructure, that is, the Securities Exchange, central securities depositories, and clearing houses. The informal sector comprises a range of unregulated financial services providers, ranging from Rotating Credit and Savings Association, ROSCAs, or as you like to say it, merry-go-rounds, or otherwise table banking, and Accumulating Savings and Credit Associations, ASCAs, or as you like to put it, chamas. The formal sector is regulated, which means they have a watchdog who ensures that all parties are protected and all risks are mitigated to guarantee market continuity. Capital markets are regulated by the Capital Markets Authority. Commercial banks and microfinance institutions are regulated by Central Bank of Kenya. Deposit-taking SACCOs are regulated by SACCO Societies Regulatory Authority, alias SASRA. Insurance companies are regulated by Insurance Regulatory Authority. Retirement benefit institutions are regulated by Retirement Benefits Authority. Now, this is the end of our introductory episode. In our next episode, we are diving deep into the banking sector in Kenya. I don't think you want to miss this. Please subscribe, like, share, and be proud of joining this army of smart people.